Good afternoon, everyone. It's been a pretty tough period to trade the markets recently. Firstly, the volume hasn't quite been there. Second of all, the whole market has been dictated by issues regarding the fiscal cliff in the US, and we're having contradicting statements from the Democrats, the Republicans, and initially there was market fear that we were nowhere near getting close to some type of resolution, and then that led to a sell-off in stocks. And then on the back of so I'm just going to put up a chart on the DAX to illustrate this. So this is where we were trading the beginning of November, and then we pretty much have come off a good 400 ticks, 500 ticks almost, in the DAX. And this is all on the back of fiscal cliff issues. So every day we just kept on coming off, and it was pretty strong retracement in these markets, and it sort of was echoed across the field, across with the S&P, the DAX, FTSE, as you would expect. But then come the middle of November, there was a lot of murmurings out of the Democratic Party that they were close to some type of resolution, that the Democrats were in power, and that they were close to some type of resolution. And as you can see, since then the market just been going back up, and we've pretty much almost fully retraced the whole move down. We're only 100 ticks off the high in the DAX, and as we came closer to today, this trend line has been pretty strong, and we've actually within 25 ticks of the high previously, which was there. So actually we're only about 40 ticks away. So it has been pretty big retracement. But then, as I bring this to a 1 minute chart, we've actually just had news out from John Boehner that there's no fiscal cliff resolution nearing, and he basically said that no substantive progress has been made in talks. Democrats comfortable going over the fiscal hill. He remains hopeful on further talks. Democrats ruling out sensible spending cuts. So on the back of that, we had a drop down over here. As you can see, this is in the DAX. We had a 25 point move in DAX, and if we look at the Nasdaq, we had even a bigger move over here, as you can see. But we've pretty much retraced about 50%, going on to 61.8. If we pull up a Fibonacci retracement on this, I think it's could be a good time to sell again. But just bring that up. So if we go here, right? So yeah, we retraced past the 38.2, the 50, and the 61.8, and so now it looks like it's pretty much going through all of these levels over here, and 71.6 is the next level. But to be honest, I could just see this rallying all the way back up to the 100% retracement before we come back off again. But it just sort of illustrates the point that there's still a lot to be done regarding this fiscal cliff issue, and because of that, we are very likely to see a lot of volatility in terms of stock markets anyway, in terms of where we're going to go. I'm going to now pull up a chart of the Bund, and the Bund has been, since the end of October, where we were trading in the mid 139s, pretty much gone up in a straight line, as you can see here as I draw this trend line, pretty much in a straight line, 400 ticks upwards. It's on the back of fiscal cliff issues again, as risk aversion takes place, and also on the back of whether problems with Greece and general European anxiety over just things that we've been talking about for ages, really. So we've actually rallied massively, and then we sort of consolidated from the this rally was in the space of 2 weeks, and then for about another couple of weeks we've just been consolidating in a range, in a 40 tick tight range, and it was actually a very, very slow time, a very slow market. and now like with the equities, on the back of Democratic speak of resolutions, the fiscal cliff, we pushed back down right to actually pushed down 130 up ticks, and then we sort of found support around here, around 142.07. So resistance over here at 143.41 held quite well, and then 142.95, and then pretty much unabated all the way down another 100 ticks to 142.07. And then since then, we've actually pushed back up in the Bund, and if we actually take this move back up that we've just had from the from Tuesday to yesterday, so it was a pretty big move that we had yesterday in the Bund on the back of Greek worries and such things. We actually moved pretty much 100 ticks there, and we initially got a sell-off, as you can see this bar here, on the back of some sort of Greek concessions, and then since then just only looked one way, and we went all the way back up, and we traded as high as 143.15, which was mid-range of the previous range over here. And then since then, if we do a fib retracement from this move up, we've actually hit the 38.2 level 5 times. So 5 times. If I bring it to a smaller time frame, you can actually see that sort of bounced off it once, twice, 3, 4, 5 times, and this level held very, very well. And now we're sort of forming a saucer type pattern, and we're heading back upwards, and we're likely to test the 143.15 pretty soon again, and then that will determine where we go from there. But looking at this, going back to 60 minutes, I would say the Bund is actually going to be rolling over next week, so the roll is 170 ticks, which is pretty big for the Bund. I haven't seen it, and this 170 ticks higher, so the March 13 Bund is actually trading 144.60, which is extremely high. Normally it's the other way around, but so I wouldn't be surprised to see some type of contraction in that roll, but looking at the Bund, I expect us to test 143.15 and then to 143.41, but as far as anything above that is concerned, I think we'll be capped off, judging by the very low yield that we would have in the March 13, given that there's a 170 point spread in between the two. So I think we'll be capped around 143.41, because that would represent 145 plus in the March 13. So I think we shouldn't go above, much more above this, but if we do, have a tight stop, and then I think we'll come back down and trade towards these levels that we're trading at right now. And just a quick word on spreads. The Euribor spreads have been coming off quite a bit lately. I'm just going to show, this is the March 14, June 14 spread, and as you can see now, if we look at the longer term chart, we're trading around 6s, 5.5s, which is the low of the range, and it hasn't actually breached this yet. So in terms of that, I expect this to hold up pretty well. As you can see from below, I'm just long a small amount, 4 lots in the March 14, June 14, and 4 lots in the June 14, Sat 14. So I'm looking to add at 5.5 should it get there, and if it does, I'll be adding quite a lot on, because it's a pretty solid level around here. And as you can see, previously we've actually traded 7.5s. We've actually gone as high as 8.5. So I don't know if this is going to go all the way up there, but I expect at least 6.5s or 7s to trade. So I think I'll be pretty confident buying 5.5s if it should go down there, and if it goes lower, then I'll just keep on buying, because do think that we will be pushing higher, and we just basically can't see it going much lower than that. So that's what I'm sort of looking at going forward, going into Christmas. So it's going to be a bit volatile, probably a bit less volume than we have now. A lot of books closing, a lot of books shutting for the year, and so we might see a little bit of volatility with positions closing and such things. So yeah, it'll be an interesting time for sure. hopefully we'll get some good movement, and we'll be able to capitalise from it. But anyway, till next time, good luck with your trading.